Hello everybody, this is the underwriting guy here. Today I want to discuss earnest money for conventional loans. We're going to talk about both Fannie and Freddie guidelines. I've seen in my mortgage experience that most mortgage professionals do not understand the guideline. We either provide too much documentation, which might cause the underwriter to ask for more documentation, or not enough documentation, and the underwriters have to go back and forth with their counterparts. And we're going to try to prevent all that today. All right, guys, we're first going to jump into this with agency guidelines, and then I will break down the guideline and put my spin into it. So let's go ahead and get started. What does Fannie say about earnest money? Please note, this is of August 2nd, 2021, and guidelines frequently change, though I haven't seen this guideline change in a very long time. If the deposit is being used as part of borrower's minimum contribution requirement, the lender must verify that the funds are from an acceptable source. Large earnest money deposits and deposits that exceed the amount customary for the area should be evaluated. Receipt of the deposit must be verified by either a copy of the borrower's canceled check or a written statement from the holder of the deposit. Now let's look at what Freddie says. It's very similar to Fannie, basically the exact same thing. When the earnest money deposit for a purchase transaction is used to qualify the borrower for the mortgage transaction, the seller must obtain evidence that the earnest money check cleared the borrower's account, copy of the canceled check, asset account statement, or a written statement from the EMD holder verifying the receipt of funds. Basically the exact same thing, copy and pasted from Fannie's guides to Freddie or vice versa. Now that we've discussed what the guideline is for Fannie and Freddie, let's discuss on what it all means. Let's break it down, Super Barney style. So we must always obtain a copy of the check or wire confirmation, either it's canceled or not. We always must have a copy of the check in the file. The why behind this is we must be able to document where the earnest money came from. This will tell us if the earnest money is being gifted or the party providing the earnest money is acceptable source or not. Example, if the realtor is giving the funds for the earnest money out of his account, that's not an acceptable source of funds. If you can provide a copy of the canceled check, perfect. That's almost all you're going to need 90% of the time. Now, if the canceled check came out after the statement date that we have on file and you cannot back it out of your assets, then you will need to fully source the EMD by providing the transaction history showing the earnest money clearing the account. Another reason you will need to source the EMD check if it causes your current statement to go negative in the account. For example, let's say your EMD check was $3,000 from account number 123 and it was written on 5/3 and your statement date cuts 4/30, but in that current statement there's only $2,000 in there. Meaning if that check gets cashed, our borrower will be $1,000 in the negative. Then we would need to source those funds. Now let's say we have a copy of the check, but it's not a copy of the canceled check, meaning it's not from the borrower's bank showing it was cashed, it's just a picture of the check. All the same rules still apply as previously discussed. The only difference now is we need to document that the check was cashed. This can be done by the title company or by the seller, or the borrower can provide the bank statement showing the funds clearing the borrower's account. Another reason that the earnest money check has to be fully sourced and documented is if the deposit is an irregular amount for the borrower. You will see this on a lot of new builds where there is more options that the borrower can choose for that they have to pay more up front. This is all underwriter's discretion on what determines for an earnest money amount to be irregular. Normally, underwriters look for EMDs over $10,000 to be irregular. Again, it all depends specifically on your borrower and the transaction. Thank you everybody so much for watching and listening. If you have any feedback on this, please let me know. You can comment or email me with questions. My email is listed on the screen. Please like the Facebook page and subscribe to the YouTube channel for more content like this. You guys have a good one. See you next time.